Right now, as I am recording this on January 5th, 2026, there are two prices for silver on planet Earth. If you open your trading app in New York, you will see $75. If you are standing in a coin shop in Caracas, Venezuela, you will pay $92. That is a $17 difference, $17 per ounce. And I need you to understand that this gap is not a glitch. It is not a data error. It is not some quirk of emerging market finance. This $7 premium is a confession. It is the physical market screaming at the top of its lungs that the paper price is a lie. And the people paying $92, the Venezuelans lining up outside precious metals dealers before dawn, they are not speculators. They are survivors. They have already lived through what is coming for the rest of us. Ladies and gentlemen, Asian guy here. We are in the middle of Ghost Week, the most dangerous period in the financial calendar. The trading desks are empty. The algorithms are running on autopilot. Liquidity is paper thin. And the banks are using this window to do what they always do. They are smashing the paper price of silver while nobody is watching. But here is what they didn't count on. While they are playing their paper games in New York, the physical market is in full revolt. China is paying $89. India is paying $85. And Venezuela, a country in the grip of hyperinflationary collapse, is paying $92. The people who have already watched their currency die are telling you exactly what silver is worth. And it is not $75. Let me take you to Caracas right now, because what is happening on the streets of Venezuela is a preview of the global monetary future. The Bolivar has entered its fourth wave of hyperinflation. We are talking about annual inflation exceeding 400%. The currency has lost 89% of its purchasing power in the last 18 months. When you walk into a grocery store in Venezuela, the prices change while you are shopping. By the time you reach the checkout, the items in your cart cost more than when you picked them up. This is what the death of money looks like. And the Venezuelan people have adapted. They have learned through brutal experience that holding cash is suicide. Every bolivar in your pocket is melting. Every day you wait, you lose. So what do? They convert immediately into anything real. For years, that meant US dollars. Venezuelans hoarded greenbacks like their lives depended on it, because their lives did depend on it. But something has shifted. The dollar itself is now under suspicion. With the Federal Reserve printing $17 billion in emergency repo operations just last week, with U.S. debt spiraling past $36 trillion, the Venezuelans are asking a terrifying question. If the bolivar can die, why can't the dollar? So they are buying silver. They are buying it at $92 an ounce, a $17 premium over the New York paper price, and they consider it cheap. They are not buying silver because they think it will go to $100. They are buying it because they know the bolivar is going to zero. And increasingly, they suspect the dollar might follow. I want you to understand the psychology of that $92 price. A Venezuelan worker earning the equivalent of $50 a month is paying $92 for a single ounce of silver. That is nearly 2 months of wages for 1 ounce. They are not doing this because they read a bullish chart pattern. They are doing this because they have seen the alternative. They have watched their parents' savings evaporate. They have watched their neighbors lose everything. They know that when a currency dies, only those holding real assets survive. The $17 premium is the price of that lesson. It is the tuition paid in suffering. Now, the skeptics will say Venezuela is an outlier. They will say it is a failed socialist state with unique problems. They will say you cannot extrapolate from Caracas to Chicago. But here is what they are missing. Venezuela is not alone. Argentina is running inflation over 200%. Turkey's lira has collapsed. Egypt is in crisis. Pakistan is struggling. Even Japan, the third largest economy on earth, is watching the yen weaken against hard assets. The pattern is global, the disease is spreading, and the symptom is always the same. When confidence in fiat currency breaks, premiums on physical precious metals explode. Venezuela is just the most advanced case. They are showing us the terminal stage of the illness. And the premium data tells the story. Venezuela at $92, that is a 23% premium over spot. China at $89, that is 19%. India at $85, that is 13%. The United States and Europe at $80 to $80, that is 7 to 10%. Do you see the pattern? The weaker the currency, the higher the premium. The closer you are to monetary collapse, the more you pay for real money. Now ask yourself where the US dollar is headed. Ask yourself what happens to American premiums when the next crisis hits. But here's the part that should terrify the banks. In a normal functioning market, this premium gap would close itself. This is called arbitrage. If silver is $75 in New York and $90 in Caracas, every trader on Wall Street should be buying in New York, chartering planes, and selling in Venezuela for a risk-free $70 profit. The arbitrage should flood Venezuela with metal until the prices equalize, but it is not happening. The gap is not closing. It is widening. Why? Because there is no metal to arbitrage. The vaults are empty. The refineries are booked solid. The delivery times are stretching into weeks. You cannot ship silver to Venezuela if you cannot get your hands on silver in the first place. The arbitrage mechanism, the force of gravity that is supposed to keep global prices aligned, has broken down. And when arbitrage breaks, you are no longer in a market. You are in a crisis. This brings us to Ghost Week and the trap that is being set right now. Ghost Week is the period we are in, the dead zone between New Year's and the first full trading week of January. The senior traders are on vacation. The institutional money is on the sidelines. The order books are thin as paper. And this creates the perfect environment for manipulation. The banks know that with low volume, it takes very little selling pressure to move prices. So they dump paper contracts into the void. They trigger stop losses. They paint the charts red. They create the illusion of weakness. This is exactly what happened. Silver gapped down from $79 to $75 on volume so thin you could see through it. The mainstream financial media dutifully reported silver crashes. The algorithms flashed sell signals. The weak hands panicked. But while the paper price was crashing, what was happening in the physical market? Venezuela was paying $92. China was paying $89. Dealers across America were reporting 2 to 3 week delivery delays. The paper said sell. The physical said there is nothing left to buy. This divergence is the trap. The banks are trying to shake you out of your position during the lowest liquidity window of the year, right before the physical shortage becomes undeniable. They want your ounces. They want you to look at that red candle and panic. They want you to sell your silver at $75 so they can deliver it to the Chinese industrial buyer who is willing to pay $89. Do not fall for it. Let me explain the mathematics of why this gap must close and why it must close violently to the upside. We have a paper price of $75 in New York. We have a physical price of $92 in Venezuela and $89 in China. There are only 2 ways this resolves. Either physical premiums collapse back to paper, which would require a massive increase in supply that does not exist, or paper prices explode higher to meet physical reality. The mines are not increasing production. The vaults are being drained. The December delivery notices on the COMEX showed over 63 million ounces standing for delivery. Roughly 8% of annual global mining supply demanded in a single month from a single exchange. The metal is not there, so the paper price must rise. It is not a question of if, it is a question of when, and Ghost Week ending in 48 hours is the catalyst. When the institutional traders return on Monday, when real volume comes back into the market, they are going to look at the $17 gap and realize they are mispriced. The algorithms are going to calculate the arbitrage opportunity and start buying. But there will be no sellers at $75 because everyone who has physical metal knows it is worth $89 in Shanghai and $90 in Caracas. The price will skip. It will gap. We could see $80 before lunch on Monday. We could see $85 by the end of the week. The vacuum must be filled. And here's the part that keeps me up at night. Venezuela is not just showing us a premium. Venezuela is showing us a future. When a currency dies, when faith breaks, the premium does not stay at 23%. It goes to 50%. It goes to 100%. It goes to infinity because at some point the sellers simply stop accepting the dying currency at any price. We are not there yet in the United States. You can still buy silver at a 7 to 10% premium if you can find it, but the window is closing. Every day that the paper price stays disconnected from physical reality, more metal flows east. Every day that the banks play their Ghost Week games, the vaults get emptier. The Venezuelans paying $92 today are not overpaying. They are front-running the collapse. They are securing real assets while the rest of the world is still hypnotized by the paper price on their screens. So, what should you do? If you do not own silver, Ghost Week may be your last chance to buy at these prices. I am not saying silver cannot go lower in the short term. The banks still have ammunition. They might try one more smash on Monday morning to shake out the last weak hands. But the risk-reward has shifted dramatically. The downside risk is maybe $70 to $72 if they go all out. The upside potential is $100 plus as physical reality overwhelms paper fiction. That is asymmetric. That is the kind of setup you wait your entire investing life for. If you already own silver, do not sell into this weakness. This is exactly what the banks want. They are trying to steal your position at the worst possible time, right before the market reprices. Venezuela is not selling at $92. China is not selling at $89. The smart money is accumulating, not distributing. And for the love of everything, own physical metal. Paper silver, the ETFs, the futures, the unallocated accounts, these are claims on silver that may or may not exist. When Venezuela is paying $92 for physical, while paper trades at $75, the market is telling you that paper claims are worthless. You do not want to own a promise. You want to own the metal. The $70 premium in Caracas is not just a number on a screen. It is a message from people who have already lived through monetary collapse. It is a warning from the future. They are telling you that when faith breaks, only real assets matter. They are telling you that $75 paper silver is a fantasy and $92 physical silver is reality. They are telling you that the window to convert your paper wealth into real wealth is closing. Ghost Week ends in 48 hours. The trap is set. The banks are betting you will panic and sell. Venezuela is betting you will wake up and buy. Someone is going to be right. I know who I am betting on. The paper price is $75. The survival price is $92. The gap between those numbers is the distance between the old financial world and the new one. And that gap is about to close with extreme violence. I am Asian Guy. Remember to like, subscribe, and share. See you on the other side.